I'm saying, are we just so fucking peak that we've got 25 million ARR companies being valued at 5 billion, 10 billion, Ilias being valued at 30 billion, Mira is being valued at 10 billion with nothing? And that said, are we going to actually look back and go, what morons? We're about to see the biggest transition in spend from software to human labor budgets, and actually how small thinking we are.
Well, one of those two things has to be true, because that's actually the interesting insight back. If that massive transfer of labor doesn't happen, then all these valuations are wrong by an order of magnitude. One of two things is going to happen in the next 5 or 7 years, right? Either A, you are going to see pretty profound productivity changes. You're going to see companies like OpenAI, Lilly being $200 to $300 billion in revenue super quickly. That's option A. Or option B, AI is still going to be wonderful, but you're going to have a readjustment period that's going to make your head hurt, and you're going to go, what were we thinking? Without speculating yet, though we can in a minute, on which of them it'll be, one of them is going to happen soon.
We're just getting started on what we're going to do in AI in B2B. It's so early. It is so early. So much like, so many of these other waves, the direction's correct. We're early. I feel it. I live it. 2 hours vibe coding. I live it that we've replaced 11 people on our team with AI agents. I can see the future pretty clearly. We're just starting. For venture and for investment, though, not only am I worried about, we've never had $20 billion pre-revenue seed rounds before, right? This is never happened, right? So beyond that, what I'm even more worried about that than now, we're back to the era where if you have $1 billion round, you can't even get in TechCrunch. Okay. You certainly can't get on 20 VC. There's no way Harry's going to slot you just because you're the 14th company this week to raise at $1 billion for your AI vertical SaaS company. You're not getting on 20 VC. But when I met Harry, of course you'd get on the next week, right? If you raised at 200 million, you'd get on one of the first 50 episodes. So my point, what I wonder is, are our loss ratios correct? If as venture VC firms, especially with larger funds, but actually I'm just as worried about seed funds because they're paying such high prices for such low valuations. As long as we get it, as long as we're cool if 80% of our unicorns implode or blow up or make no money, more importantly, just don't make money for venture. As long as we've got it all right, even if those are at 100 or 2x ARR and we modeled it properly, but I'm pretty sure we didn't model it right in 2020, 2021, those unicorns. The B2B unicorns, we did not model them correctly in terms of our loss ratio and expectations. As long as we have, I'm cool with the party. It feels almost risk-free again, like it did in 2021. It feels risk-free.
Valuation and loss ratios both matter, but maybe just distinguishing them just a little bit more, right? Because I think of the loss ratio as the time you just picked wrong, right? And remember, it's worth pointing out that so the number of times you picked wrong versus picked right. There was a product that got product market fit versus it didn't, right? And if you get that wrong, there's nothing you can help. Your valuations don't matter. It's just, you wipe out, right? And that would be true if all your positive deals were pleasantly priced and if all your positive deals were highly priced, right? Valuation separate, which is, okay, you got the picking right, but you can also make a second mistake. You paid up so much that you didn't make a return on those deals and enough in itself or enough to cover your loss. So you got to break it down. You can imagine people failing because their picking ratio was bad and they just put too much of the money in bad companies, right? Or you can also imagine people failing where all their companies were great, were good companies, but the prices were so bad that they only made a subpar return, even though they only had a 30% loss ratio, right?